And now that we have the balance of all of our T accounts, we can finally move on to the end game of this assignment, which is to make our cost of goods manufactured schedule and then ultimately our income statement. So starting with the cost of goods manufactured schedule, the first thing that I need is my beginning work in process. Well, we have two WIP subsidiary accounts, and each of those had a beginning balance. So my beginning WIP company-wide for Rewind Recycling would be the sum of the beginning balance of our two sub-accounts. So going back to our T's, WIP inventory molding started with a balance of 51,020. WIP inventory breakdown started with a balance of 28,080. Add those two together, and you get 79,100. From this, we got to figure out what amount of cost went into manufacturing during the period between both different departments. So what we're going to do is we're going to start with our beginning direct materials inventory. We've got a separate subsidiary T account for our raw materials inventory that we consider direct, and the beginning balance of that was 4,000. So I can bring that on over. We got to add in the amount of direct materials that we purchased, and that was what we did in the very first journal entry we recorded. So going back to the journals, all the way up to journal entry A, when we purchased inventory, raw materials to be used in production, we purchased $200,000 worth of direct materials. So we're going to bring that on over. Direct materials available for use is just the sum of those two numbers. If we started with 4,000 and we bought another 200,000, we now have 204,000 in total. From that, that's what we could have used, but we didn't use all of that. We're going to have to go and subtract out what we didn't use. And that's just the ending balance of our raw materials inventory direct account. I want this to be a negative, so I'm going to hit equals minus to start. And then I'm going to go over to my T accounts, and the ending balance of raw materials inventory direct is 41,750. So now my direct materials used is just that 204,000 minus, but I'm going to say plus because this is a negative number. The 41,750 that we have left at the end means we must have used $162,250 worth of materials in production. Does that number make sense to us? If I go back to my breakdown PCR over here, information on the top tells me here that they used $153,810 in materials. For molding, they used $8,440 in materials. Well, off to the side over here, I guess I'll just add that 8,440 that we used during the period to what got used by breakdown, 153,810, and I come up with 162,250, the same number that I'm reporting on my cost of goods manufactured schedule. For direct labor, what amount of direct labor got used? Well, this is still going to jibe with the PCRs, but I'm going to go to the journal first. We had two entries where we accounted for labor over here. And in this one, we said that the amount of labor costs that we had, which we paid in cash to our employees within the breakdown department, was 81,600. And to that, I got to add what's going on in the entry for the other departments. And in that case, we had $102,670 worth of wages that were paid to employees in cash. Add those two numbers together, I come up with 184,280. And then I'm going to use that same process. I'm going to go and figure out how much overhead we allocated between the two different departments, also found in our journals. We allocated to the breakdown departments, $26,000 worth of overhead. I'm going to add to that the 74,000 that was allocated for the molding department, and that's 100,000 in total. So if I sum up those three numbers in the center column over here, the total amount of manufacturing costs that got added during the period were 446,530. And just to check my numbers over here to make sure everything's making sense, I'm going to just hit equals off to the side, and I'm going to go to both of the PCRs and add all of the costs that got added during the period. So going to my breakdown PCR over here, the total costs that were added during the period for breakdown was 261,420. I will add to that the total costs that were added by the second department. I can't count that 270 because it's going to be double counting because that was in breakdowns as well that they transferred out. But they added 8,440 and 170,670 that's unique to this department. And all of that maths out, as you can see, to the same number. I'll even put it in the same formatting. There we go. So our COGM schedule is jibing with what we've got going on in our production cost reports. Everything's looking good. What amount of cost do we have to account for now? Well, the units that we were working on at the beginning of the period already had $79,100 worth of manufacturing cost committed to them. We spent another 446,530 during the period to uh, continue working on stuff. All in all, we've got $525,630 of costs that we have to account for. Well, now we got to subtract from that because we're just figuring out what amount of cost went into goods that we actually finished producing during the period. We got to subtract from that the amount of cost that's contained in our ending WIP. So I'm going to say equals negative and then open a parenthesis because I'm going to have to add the ending WIP together for our two T accounts in this spot. Go into my T accounts over here. For WIP inventory molding, there's 26,130. Add to that the 19,500 that's in breakdown. And those two numbers come out to be 45,630. And now I can go and say if we have $525,630 in costs that we need to account for, and we know that 45,630 of that is tied up in units that we were still working on at the end of December. The other $480,000 must have went into goods that we manufactured and finished during the period. And that number also makes a ton of sense according to our PCRs. Our last department is the molding department, and the molding department transferred out the cost of units that we finished during the period, $480,000 to finished goods. So our cost of goods manufactured schedule is jibing with the amount of cost that we transferred out of our last phase of production. And with that number, we can move on and make our income statement. And for our income statement over here, we are going to have to go and start with the amount of sales revenue that we recorded, put it in the right-hand column. We have a T account for that. Sales revenue is 1.1 million is the balance of that account. Over here, we're going to have to do that formula one more time for our finished goods. So let's start with what was in our beginning finished goods at period's beginning. Going to the T account for that, finished goods inventory had a beginning balance of 117,000. Cost of goods manufactured, we just solved for on the previous statement. It was 480,000. So if we had $117,000 of finished goods when December started, and we made another 480,000 during December, we theoretically could have sold $597,000 worth of inventory. But we didn't sell all of it because we have ending finished goods. And I want this to be a negative number as well. So equals minus, go into my T accounts. What's the ending balance of finished goods inventory? It was 49,750. So if I take my goods that I could have sold, 597,000, and subtract out what I didn't sell, 49,750, I come up with 547,250 is the amount of goods, the cost of the goods that we sold before we made any adjustments to it. That jibes. If we go back to our journals, we had an entry where we recorded some sales. And when we recorded sales for December, we recorded COGS of ta-da, 547,250. So all of my numbers are jibing. In this case, we had that cost of goods sold recorded based upon our estimate of overhead, and it was wrong at period's end. In the final journal entry, we had a credit to cost of goods sold for $2,000 because we over allocated overhead during the period. Cost of goods sold is an expense account. Like all expense accounts, it increases on the debit side and decreases on the credit side. So that represents the fact that we need to knock our cost of goods sold down by $2,000 for that misallocation of overhead. Going back to my income statement, equals negative. I'm going to go to the journals and grab that $2,000 credit to COGS. And now for my actual cost of goods sold, I just take what it was before the adjustment. I account for the adjustment. I reduce it by 2,000 in this case, and I get 545,250. And going to my T accounts, that is indeed the ending balance of my cost of goods sold T. So now I just got to figure out what our gross profit is. And gross profit is always sales revenue minus cost of goods sold. Please do not add them together. It doesn't make sense to have a bigger profit margin than what you sold something for. So we've got $554,750 of profit after we've accounted for only manufacturing costs. But we've got a bunch of other costs that we had during the period that weren't related to manufacturing. Advertising expense, property tax expense, depreciation expense, utilities expense, and salaries and wages expense. Well, we've got a T for all of these accounts in our template, so we just go and find those individual numbers. For advertising expense, its balance is 65,000. For property tax expense, the balance of that T account is 5,000. We've got depreciation expense, going back to our T's, the balance of that account that's down here is 4,000. For utilities expense, the balance of that T account was 1,000. And for salaries and wages expense, and again, these are not our manufacturing workers getting paid, it's our administrators and our selling staff. The balance of that account is 70,000. So all in all, right here, our total S and A expenses is just the sum of those five numbers. And that comes out to be 145,000. So now to figure out how much income we have left after we account for both sides of operation, our administrative side and our manufacturing side, we take the gross profit that we had and subtract out the selling and administrative expenses. After accounting for both sides, Rewind Recycling has operating income of 409,750. Unfortunately, they don't get to keep all of that because we have to pay the tax man. And we made a journal entry for that as well. Going to my T accounts over here, when we made that journal entry to account for taxes, our income tax expense for the period was 109,750. I'm going to bring that guy on over. And now this is how much pre-tax income we had. We had to pay $109,750 in tax out of it. We're left at the end with a pretty healthy amount of income comparative to the amount of revenues that we generated. Rewind Recycling made $300,000 of income during this month of December 20XX.